Okay, let's try this again. Good morning, everyone. Apologies for the delay. Great to be with you guys this morning for this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, September 17th. Um, Man, really hectic morning for me. I'm not even going to get into it, but thanks for sticking it out with me, guys. I didn't want to miss this webinar at all costs because obviously we have the FOMC interest rate decision on tap tomorrow, and I do want to make sure that we get through at least all the setups that we'll be tracking into that. So feel free to throw them on the message board. Any questions that you got, guys. We're going to start right with yesterday's update, go through all the dollar crosses, okay, and really just prep ourselves for this. Remember, markets are largely priced in as far as this um, cut is involved or is concerned. Again, a quick look at the CME Fed Fund futures. We looked at this yesterday, but I just want to look at it again just ahead of the release. A little bit trimmed, about 62%, even a lower expectation from yesterday. And you see markets throughout the week have been softening those expectations for this release. Now, again, the focus is going to be on the December read as far as what this specific outlook looks like at the end of tomorrow. With pretty much, the majority calling for at least one more base cut or one more 25 basis point cut, but there is that extraneous 40 some odd percent, more than 40, almost 50% that are calling for another two. And on the backdrop of the global race to the bottom, as it were, um, it certainly will be very interesting to see how Powell treads this or how he walks this tightrope. That being said, here's what the DXY looks like. Here was our last update here on SB as we were heading into this key region. So we went over this yesterday in the free webinar on daily effects. You guys know where we are on the DXY, specifically on the weekly chart. We're still holding that resistance level, the same slope, the major parallel, and even on the sliding parallel of that same slope on the intra-week, that's still converging essentially on that breakaway gap, 99.43. It's still the level you need to be on the upside to mark resumption. Downside support, just look for that basic trend line off the 2018 low. On a weekly standpoint, this is really what you need to clear. That's pretty much the end all. Let's call it 97.30s into 99.43. That's basically the entire world for the dollar as it stands right now. Here's DXY in the daily. Again, key support that we talked about in the webinar, 97.71, 97.87 is the support zone that has continued to be a decent pivot in price. Last year's open, the 618, the drop off the highs that he made in 2017. And slope is in there heading into the FOMC. That is the support zone to beat to really mark or suggest that a more important high was registered here. Also note that it's now the objective monthly range lows. Tested not only back here on the 11th, but also back here on the 13th. So man, the dollar is at such a precarious position. Look, I'm not surprised to see this is going to get sort of quiet. We're going to get all that chop heading into the release. Basic key resistance, near term, 98.94, 98.03. That's a September open, 618 extension, and the 618 retracement of the near term drop. Basic slope resistance is in there on the near term. Okay, this is your breakout as it stands right now. Our base case scenario, or our favorite scenario, my humble opinion, is that you still look for weakness on a stretch or a strike into this zone and failure. Maybe it overshoots. Maybe it goes for a tag of the parallel. But we're looking to fade strength. Ultimately, a downside break below 98 would open things up. Okay, that's the 618. That's just below the objective weekly range lows. But it's really 97.71, the bottom end of this range. That's going to be needed. That's the 2018 highs to validate. All right, cool. There's next leg lower here in the dollar. All right, so real critical here. Real critical. What else can I say about this? Looking for failure, 98.93 into 98.94. Any questions on DXY? Hey, Peter, I definitely got you on the SPX. Yeah. All right, so let's move on. Euro. And here's what last night's update looked like. So, as I was saying, it's either 109.72 or 109.90 to 109.98. Both beautiful regions of inflection, of technical significance. That's where we want to see this drop down hold. Okay, if Euro is indeed heading higher, and that reversal we made last week was something more significant. Here's Euro now. You're seeing that that level has offered a nice bounce in support. Wouldn't say we're out of the woods just yet, but the initial bounce is good. Look, it still could be 109.73. It's the low day close that you made into the start of the month. Converges on the median line over the next 24, 48 hours, not even 48, but next 24 hours. So we want to see that level hold on the maximum on any drawdowns. Weekly open resistance is 110.73, really clean level. Ultimately a 111.12 pop, 111.7, 111.12 pop. This is what we need to ultimately clear the breakout if we're going to get it in Euro. Here's the chart from last night, and here's where we are now. So what do we do? So if you're holding longs, okay, basically you want to get to break even or better from here. You might want to slice a little bit off. I don't know where your entries are, but if you're closer to that median line, maybe a nice place to reduce a little bit. But your stop needs to be break even or against that low. If we pivot below the monthly open, I wouldn't want to be caught in anything on the long side per se. If we drop into the low day close and it fails, maybe then you have a new low to trade against. But Eman says, hello, Michael. I sent you an email because I kept trying to connect myself to SB today, but the webinar site was not allowing me to join. Till now, it works. Okay, Eman, you sent me the email. I'll take a look at it. I didn't launch the webinar, guys. Again, I got caught in something out of my control. So we did start a little bit late today, Eman. I hope that's not what it was. But no, you didn't miss much. We started at 9. So anywho, for the euro, looking to fade a larger downside exhaustion. Okay, if it breaks through the median line, we get through the weekly open, I think I'd be more comfortable. If it dips one more time towards the low day close, that's my level of, that's the level I favor for a larger sort of test of support, possible entry. Again, one thing we always want to note, don't get too caught up into anything heading into Fed. Okay, it's perfect timing where people get chopped up, things get really, start to flatten out, liquidity starts to die out. Iman says, yes, I'm long at 109.92. Great entry, great entry. So Iman, this is sort of your first hesitation level, as it were. I'd have a break-even stop or better, but if it pulls back, that's really where we don't want to see it drop any lower from this. If this pitchfork is in play, and I was looking at this yesterday, it's way too early to tell, and I really don't like these equal pitchforks where the low is equal on the previous low. Typically, these don't end up being very fruitful, but it highlights a region that we're watching anyway, which is 109.90, 109.96. I want to see support hold at 109.72. Weekly opening range break opens up another test of that 112. Any questions on Euro? Man, this thing, it's such a great spot. And again, Euro on the weekly, where we turned from, right? You can't make this stuff up. This is reason why we need that 111.12, 111.7 level to give out. It's also basic slope resistance off the yearly high or a late year high that we made in July. You get it, right? So I think the levels are really clear. I favor the breach, but at the end of the day, we're not out of the woods as long as we're below the weekly open. Okay, so be nimble on this one. Watch liquidity thin out today as we get towards tomorrow's FOMC interest rate decision. And again, buckle up. Things are likely to be super interesting. Best case scenario for you, Michael, heading into FOMC. Again, best case scenario for me is you look at the DXY, it sees another spike into resistance. Euro sees another spike into the low day close and then failure. Just my humble opinion, guys. That would be what would make me sort of wag my tail all day tomorrow. All right. So that is DXY and Euro number 1 and 2. Here's what the update from last night looked like. So we also took a look at Kiwi, and this is one that we haven't looked at in a couple of days. Last update was on the 12th, but boy, it was coming into the first major support. So if you recall, on the 12th, when we highlighted this setup, excuse me, the basic premise was, look, this thing has made a pretty radical advance. We're coming into near-term resistance. The weekly opening range is set. Looks like you're making a weekly opening range below slope. Look for the downside break. We're looking for 63.83. We're looking for 63.38. It's a basic 618 advance. Fast forward to last night, that's exactly where we were bottoming out. Last week's opening range finally broke late in the week, gave you a downside bias into the close. As you opened up this week, we were still in this real tight descending slope rather, and that key zone, 63.38, 63.47, converged on the lower parallel. So a nice spot to look for some possible support yesterday. And basically, it didn't happen. You pivoted below, and here's the next drop lower, 63.38. Now resistance, right, into 63.47. So we're now pivoted below here. Next major support comes in at like 63 handle, just above 63.07. But this is now near-term resistance, bearish invalidation, still at the weekly open. Still at the weekly open. So interesting to see the sort of disparity between what's happening in Aussie and Kiwi. In my opinion, Aussie's also testing upslope support. Kiwi's testing downslope support. So a little bit of a different animal in where they are in near-term trend. Look, you haven't seen any strong divergence yet. I'd love to see momentum pop out of the oversold condition. I don't really want to mess with this unless we get back above 63.47. That would put me back on the sort of rebound approach. But right now on this advance, this is the level you need to clear, okay, to dispel the downside bias. You're still in the descending channel. You're still, now pivoting below a major decent support pivot that we've been looking at. And again, you can see inflections here all throughout the decline and the ascent. So that's sort of the level to beat if you want to shift the focus higher. As long as we stay below this, you're still looking for that possible stretch near 63.08. Now that would line up with the dollar sort of giving one last oomph, right? One last rally, one last hurrah. Maybe we get some supportive commentary from Powell. I don't know, but that's the idea. So even if this rallies and holds this channel, I'd still be looking for a possible drop there. If we clear the weekly open, I'd be much more comfortable trying to play sort of the resumptive trade. Remember, we're making an assumption still that this came off a pretty big downslope support this month. We saw a massive, nice little rally right off that level. We held resistance here at the 2018 lows for literally 3 or 4 days. This is where we want to see support hold. Now we're dribbling below it today, but remember we haven't gotten a daily close below this yet. So if the daily close today materializes back above 63.47, which is what I was saying before, this level here, that would make me feel more comfortable. Obviously, if we clear the weekly open, I think you shift the focus back to the upside. But generally looking for downside exhaustion, okay, in New Zealand dollar. Any questions on Kiwi? Going once, going twice. That is New Zealand dollar number 3. All right, Swissy number 4. Man, this thing, if it flirts with resistance any longer, it's going to be ridiculous. So here it is. It's pushing through. Our idea on this trade, essentially for the last couple of weeks, has been trying to play downside resistance rebounds or reversals off of this zone, and it's been fruitful until this attempt right here. Now, the reason I still don't want to get comfortable on the upside here is because of a couple of different things. A, we just went over the dollar prospects and how it could see a little bit more upside, but you're basically running into some resistance on the DXY, support on the euro, support on Kiwi, right? All of these things that suggest, all right, maybe a little bit more, but you don't want to initiate new trades in that direction. That's exactly how I feel about Swissy. Um, we loved the broader upside of where Swissy turned. You guys remember our outside reversal day here shifted our focus higher, but we started to kind of wane on that as we hit the first downslope resistance. And then once this broke, for me, 9948 was a level to watch, and it's been pretty decent as far as trying to call some short side exposure. 9930, 9948. We've been talking about this zone for a while. The 100% extension, the 50% retracement, and then you got the opening range highs for July. So if this is legit, you find support at 9930 now, and a break above that slope, the 75% line should expose parity. Okay, should expose parity. Again, it's one of those trades where if you're not already in it, there's nothing to do on the long side, but look for that exhaustive stretch into resistance. Okay, namely that's like 99.80 for that slope at this point, 99.70, let's call it. And then the 618 of the drop is on upslope resistance here. The problem is that would necessitate a whole invalidation of the broader decline we've been following from the yearly highs. So a little more precarious, even so, in the Swiss franc. If we close above these levels, if we clear this formation on an upside break on a closed basis, there's really nothing to stop that parity 16618 tag. But not of the mindset that we just get the straight rip. Watch out. Near-term support at this point, 99.30. We'd want to see that hold if there is further upside to go here. But this is an exhaustive trade, okay? We're looking for whether you get exhaustive runs into these resistance zones. It's not a trade to try playing the long side. Even on a scalp basis, guys, just take my word for it. This is not the one to look. You're better off, even if you do want to play a dollar long position, you're better off not taking a trade that's testing all sorts of resistance. Downslope resistance, upslope resistance, right? Former swing highs. I mean, it's loaded. It's loaded. So if you're holding longs, you want to be shaving off at these levels. The first level would be this confluence region here, okay? Like I said, 9970s. Look for that downslope on the daily chart, the upslope on the intraday chart. Look for a region there. I'd shave off a little into 9970. Definitely, if you get into northbound of parity as you get near that 618, I'd be looking to take the rest off. Yeah, you should be break even or better on anything with that. Make sense? All right, that is Swissy. As we move right along through yesterday's update, here is gold. And we will be watching this one like a hawk this week. So look, it's in consolidation. It's basically straddling 1500. Okay, I'll have a chart on this for you guys as we head into the FOMC, obviously. But man, it's still the same setup that we've been looking at for the last couple of weeks. Look, the whole inflection below 1522, 1526 is the theme. I've been of the mindset, again, ask Mike Boutros what my humble personal opinion is, like my ideal scenario if I was, writing a story, how this would go. I'd still want to see a new low register in price before any type of major resumption for the uptrend. Now, whether we hit 1511 and bounce lower, or whether we even stretch back into 1522 and bounce lower, I'm just of the mindset that you see a new low register first. Look, there's a couple of different ways that we can also approach this. First of all, there's not really much to change on the daily chart. I'm sure you guys have all seen this before. The last 1480 was the level that we were highlighting, was that swing low from last month. Also, slope support. You have 1479 is the actual 50% retrace. So there's a lot to look at down there where we just turned ahead of last week. So for me, I'm treating this, as I noted yesterday, kind of as a range, sort of as a consolidation range. I didn't want to clutter up the chart, but I'm working under the assumption of something like this. Okay, where you're going to see this thing tighten up, coil up, Again, it's the emphasis on 1526, 1522 for the breakout. The weekly open, beautiful area of support. If we get back below the weekly objective range open, you're looking for that drop towards 1478, 1460, both areas of which I'd be looking to fade a larger drop if you get a decent reversal. But yeah, I mean, I feel like the risk is for that last washout. Now, what would help with that? Well, if we get a rosy sort of things are pretty good from the Fed, and you see sort of them start to downplay expectations for additional cuts, you'd see actually, in my opinion, um, sort of a drop in gold prices, maybe towards that next low as the dollar pops into a new high, and then you see that start to fade. All the indications that we're looking at, guys, are suggestive that this is corrective pullback in gold, ultimately moving higher, and that the dollar is essentially heading up into uptrend resistance. So you want to look for that exhaustion on a stretch higher there. Questions on gold? Kevin, good question. He says, in your reports, you say watch for a reaction there. What exactly are we looking for, and how do we trade it? So when I say a reaction, you're looking for a level of low tolerance, Kevin. So what I mean is, I don't want to see price jump into this region and basically dilly-dally. I don't want to see price do something like this, chop in the region. If I'm looking for a reaction, I'm either looking for a rejection, okay, which is a strong rebound or recovery, or, Kevin, if it breaks, acceleration, and that's mandatory. If it's a level of technical significance, it needs to be one of those two solutions, right? It needs to either be a really nice whipsaw action, a nice rebound, or the accelerated move. If it breaks, price will actually accelerate faster into that direction. So we're on the lookout for those. How do we attain those? Well, you're looking at near-term price action, Kevin. You're looking at momentum oscillators. You want to see whether the momentum thrust has the push. Is there divergence into that region? We should be looking for the actual reversal or rebound. You want to look at what near-term price is saying. So, Kevin, those are levels of which we're looking to operate off of, right? If the reaction is a decent reversal and bounce, then that's where you have your stop against. Try to play the side. If the level is an acceleration and you get the breakdown like this, you're not going to chase it, but you're essentially looking for the recovery, another swing high, if you will, to fade that same directional move. But the reaction levels are everything, right? You want to zoom in on price and really look at what price action is saying. It's a little different, Kevin, from the swing setup. So if you're following Jamie's side of the site, you want to put those limits and entry and kind of let the market do its own thing. But when we're intraday trading, it's not advisable, at least in my opinion. I don't just sit there and put limits as soon as price gets there, jump in. I need to see what price does there. Is it on a stretch? Is momentum overbought? Is there divergence? Is there a weekly recession? Even for the U.S. trade session, is there an opening range break that gives me further evidence that that run is going to go? So does that make sense? I hope I didn't confuse anyone. Hope that helps, Kevin. Welcome aboard. Always great to see you in the room, sir. All right. That is number 4 and number 5, gold and Swissy. Okay, moving right along. Got to go through all the dollar crosses today. Aussie. Here's Aussie. So same thing here. We were talking about wanting the pullback for the last couple of days. Again, if you go to the previous update on the 12th, we were talking about the same thing as this thing was heading into that 50% retracement, 68.79. I've been saying the same thing for a while, guys. I'm looking for a bigger pullback. I love the long side, but I just can't get excited. I think it might have been even a previous day before that. I just can't get excited about an Aussie long before some sort of pullback here first. And this is as we were testing that 68 79, 68, 80 level. So it took a couple of days, okay? It took 4 days to be precise before this thing finally turned lower. A break of this near term, okay, formation to the upside, right? This near term ascending channel formation was the onset. There's the break, decline, now testing up slope support. Now remember, 68.28 was the bottom side. We said if we cleared below this range, you're essentially risking a much bigger decline in Aussie. But as all things held constant, this is the first support zone right here. Remember, 68.15 is still bullish in Val. This is what I wrote last night. So 68.28, 68.15, both levels of interest for possible exhaustion. We just missed that first level. If we whipsaw, if this thing drips into this level, then recovers a daily close back above, that would be a fade opportunity for a long. If we settle below 68.15 on this stretch, there's nothing to stop this from going sub 68. 67, 66 would be a 618 of the rally. But it's do or die here, right? So on Aussie, nothing really changes as far as the level is concerned. At this point, you are looking for exhaustion on a stretch into this zone, this butter zone between 68.15, 68.27. Again, if we close below that region objectively, okay, it's a huge pivot in price. You're looking for a larger decline in Aussie. Don't forget where Aussie's coming from. This thing's coming from big support, multi-year, multi-month slope support. Here's Aussie on the weekly chart. This is my concern. If we make it back below this zone, 68.27, remember that 618, 68.15, so 38.2 rather, that's the last zone I'll be willing to take. If we pivot back below this zone, well, you're in trouble. You're in trouble. But Aussie now testing upslope support, looking for downside exhaustion while above 68.15. Questions, comments, concerns on Aussie? All right. British pound, sterling held resistance. Here's the level that we were looking at yesterday, or right into the start of the week. It was 125. It's a level of significance just because, not so much per se the 38.2 retrace. Well, yeah, let me take a step back. I'm getting too excited here. Here's sterling. We were looking for the setback just on account of this formation right here. You had 124.80 into 125. That's the actual swing lows from 2018, so the yearly swing low. And then you have a 38.2 retracement of this year's entire range. So taking into account all of 2019 trade, that gives you a 20 pip zone of resistance. It's exactly where this thing rammed into and pivoted back. If the breakout is legit, and obviously we're working under the scenario that this is a much more significant low that was registered, we finally cleared the August opening range highs early this month. We broke downslope resistance earlier this month. This is your first level of significant sort of topside resistance. Here's the pullback. Here's the intraday chart. All right. Like, I don't think this is going to get too deep, okay? But areas of interest haven't changed. You're basically looking for that 25% line. I know that we peaked above this, guys, but remember how fruitful these have been in the past. If you just stick with the slope, even when it gets invalidated, stick with the slope for a little bit. That puts support right here near these pivots, not 23.50, and then bullish inval for the near-term advance. I'm still going to keep at 123.10. So even if this gets a couple more drawdowns, I think inevitably that might be a decent opportunity to get back on the long side. Look, there's a lot of headline event risk here. You not only have the FOMC, but you also have the Bank of England interest rate decision this week as well on tap on Thursday. So keep the powder dry here for sterling. keep the powder dry here for Sterling. The most, ideal scenario, this thing collapses or gives us one last washout on the back of this massive rally towards 23 for reentry. I think the risk is still for a little bit of a draw lower before you get resumptive action here on Sterling. And now that we've made that near-term turn, you can kind of work with this retracement. I didn't want to clutter up the chart, but if you work with this retracement, the 38.2 comes up right in line or just below that 113 handle, 120 or 123 handle, 123.96, right? So it brings into focus like this zone of support for Sterling. Something like that. But man, you're coming to some critical levels here. And again, we'll have our webinar on Thursday, guys, so we'll be able to talk about this again as we get through BOE, but just something to keep in mind here. All right, getting through to dollar yen. The abomination is still on the tear. This thing just won't stop. Look, I really don't have much to say on dollar yen. Basically it's kind of along the lines of what we said yesterday in the webinar. I mean, if you're holding longs, there's no reason necessarily bail on them, but I can't get excited about anything on the long side here. It's just, you're testing uptrend resistance. You're testing just below the 50% retracement, right? And it's on the back of a pretty radical advance. Look, what do I want to say about this? It's too clean. It's dollar yen. Ideal scenario, this thing jacks slower, 107.47, ideally 106.80s. Hell, I would love to see it drop towards upslope support and then a ripperoo. The thing is, we like the long side. We started looking for short exposure here as we were heading into that 107.83, 107.97 level. But the pullbacks just haven't gotten much momentum. And point in fact, the weekly opening range low for the week is right at the former resistance target we were looking for on the way up, and that's still 107.45, 107.47. So man, I mean, if it tops 108.42 and you're in the long side of the trade, or if you're gutsy enough where you got in early in this week, great. Look for 109.35. There really shouldn't be much of an interruptive move ahead of that. It's a huge resistance confluence. But if it fails here, if it fails at 108.41, I'd be looking for a drop towards that 107.47 target, if not lower, inevitably looking to get back on the long. But it's hard to get excited about trying to get long dollar yen anywhere what's around these levels. Pooja says, anything on Euro Kiwi? I have it at resistance 74.60s, 74.70s. You know what? Let's take a look at Euro Kiwi next. Any questions here on dollar yen? Usually a big mover, a big reactor to U.S. data and U.S. Economic development. So look at this one. Definitely into the FOMC tomorrow for a tell. Obviously, the correlation with yields as well is something to keep in mind. But coming up against near-term resistance, if we pop through 108.40s, could see another 90 pip rally higher. Euro Kiwi, let me take a look at what that looks like, Pooja. Well, right off the bat, you're checking monthly open resistance, right? I have that resistance, she says, at 74.60, 74.70. So 74, 74.27, Pooja, is actually the monthly open resistance. That's where we open the month, and that's where that pivot is. So you see this pitchfork? This is another example of why we want to kind of keep these on. Once this broke here, things collapsed. It completed 100% extension, so 2 equal legs off the high, and that was it. That's all she wrote, and this thing ripped, right through all these levels. Here we are again, sort of checking slope, support, support, resistance, breakthrough, acceleration, pivot. We're right here right now. We're right here right now. $764 is like 74.50. Yeah, what do you have up there at 74? At 74.60, Puja, because I have resistance ahead of that. Um, the next level on the upside, man, this is even the high day close for the year that we're getting through here. Right, here's your yearly high, the high day close coming at that level. This could be somewhat of a breakout, and also the objective monthly range highs come in just higher. Bear with me one sec. I want to see what the intraday chart looks like on this. So let's just get rid of this slope on the intraday for the sake of clarity. If this slope is in play, lower parallel thrust through, upper parallel breakout. Again, it would suggest that we're on the cusp, if you as it were, for a larger near-term breakout. The 38.2 needs to be adjusted to the new high. Yeah, it's looking a little bit higher. With all the event risk on tap for the next week, I'm feeling a little gun shy. I have been burned too often by volatility FOMC. How would you like to intraday trade on weeks like this? So Kevin, um, Pooja says a parallel from the pitchfork. I'll retweet you after the webinar. Shoot me that over, Pooja. I haven't looked at this in a while. I'd be interested to see what you're looking at there as well. Kevin, if you're getting trigger shy during FOMC, man, that's completely normal. I actually get really freaked out when people are like, "Oh yeah, FOMC is going to do this. I'm going to do this and this." You shouldn't know. It is an X factor, Kevin, and it then tends to put a brick in or a wrench in some setups. If you're feeling that gun shy, sit aside, man. It's no problem. I can't even tell you how many central banks I've sat there and closed my platform before it even opened because I don't want to be tempted into doing something because I don't have any clarity on the setups. If that's the way you feel, man, take a step back. Enjoy the show, right? We'll get plenty of opportunities. This is the heading to the most volatile times. You're going to have some really good opportunities that set up. If you don't, play FOMC per se, nothing wrong with that. For me, it's all about having the setups mapped out, Kev, right? We want to know what levels we're looking at, and if the market follows our expectations, we get that last spike in the dollar, we start to see that materialize, well, then you have the levels mapped out, you know what to do, right? It should be methodical. Oh, it hit my level and pulled back. That's the level we were talking about. Hey, I'm going to take a short here, right? But it's this, oh, I'm going to try to trade what Powell says. This is where you just make a mess of things, okay? Forget that. We want to be watching price when the event happens. Obviously, if they cut three or 50 basis points, obviously, Kevin, at that point, you know that that's going to have an impact on the actual price movement. But if we get the expectation of 25 basis points, it's all about the commentary. Just be at your computer, watch the price action. And Kevin, just to put things for you very lightly, in events like specifically the one we're heading into tomorrow, sometimes I don't know if I'm going to have a setup. I'll have 3 or 4 setups that I'm looking at into the release. If the levels are convincing, we get a decent stretch and a fade, or breaks through resistance and just starts to run. Maybe there's a setup, maybe there's not. Don't set the expectation that you have to trade tomorrow. We hope that the event will trigger an opportunity, but it's the expectation. What have you trading for? What are you going to trade for FOMC? Well, I don't know. I may not trade anything. I might be 3 trades deep. It all depends on what the market gives me. And that's why price action needs to be our only and primary focus, right? So I hope I didn't go on a tangent there, Kevin, but he says makes sense. Yep. All right. Did we get everything? SPX. Pete, are you still in the room? I got to run here, guys, but here's SPX. Man, you can't make this stuff up. Guys, this is the same exact setup that we were looking at last week. Here's SPX on the 11th. Here's the last update that we made on it. We were talking about watch traffic, stop traffic, 3020, 3026. That's the high close and the record high. Okay. At this point, near-term support, you have to give it and grant it back to 2978, 2981. We were talking about that region for a while on the way up. Look where this thing did. Failed right into a probe in that region. On the pullback, failed right at key support where we were looking at. We're now sitting at channel support. At the end of the day, it's the same thing I said yesterday. I think we went over this in the webinar. It's all about 2978, 3026. This is the break that matters. This is the break that matters. If you look at this on a daily chart, it's pretty clear as we're just testing the high close and pulling back. Very simple. Very simple. Divergence failure essentially at 60 or just above, right? If this support trigger gives out on the daily chart, actually, you can probably do something like this, a little bit more conviction, right? You start to look for the sort of conviction pullback. I'm of the mindset, again, very similar to the DXY, guys. If this thing spikes, it makes a fake rally. They hint that there's a lot more easing to go. Watch for reaction here. If you get a 3026, 3020 rally and rip and it just continues, you're just working with slope. You're just looking for the upper parallel. There's no lateral levels. We're in uncharted territory northbound of 3026. Ideal scenario, if it fails at the weekly open, it fails into this region. I think you look for the break below 2980 to really be in a more assumptive correction in risk. Now remember, if they cut rates, the markets have priced that in, but that's good for broader risk, right? If they don't cut rates, the markets will definitely take it on the chin. I'd expect to see some weakness. I'd expect to see a quick break below 2978 here because that easy monetary policy is sort of pulling back. If they cut rates, but they come out with a much more hawkish stance. So listen, we're cutting rates here, but don't expect too much more, right? There's not much more room. The markets are really doing well. You heard me say yesterday from a fundamental quote unquote standpoint, it is hard to justify cutting rates. Inflation is starting to pick up. Markets are running at the natural rate of unemployment. Those are the only two mandates that the Fed is charged with by Congress. What the hell are you cutting rates for? Now, you can make the argument that there's a lot of global concerns. You got trade tensions, you got Brexit, you got global central banks easing and pulling back on rates, and you got that divergence dichotomy, which is kind of hurting the U.S. in that it's prompting more dollar strength, and it's offline or not as aligned with the global outlook, right? So fine, we can do that, but it's really going to be on what the projections show, okay, and what the Fed's outlook, the guidance, if you will, that they offer for a move forward. Pete, can you look at oil real quick? Sure can. So that was SPX. Here's oil. Um, what I tell you guys yesterday, someone was asking about this in the webinar, and someone was getting really irate with me. It's so funny. Sometimes in daily effects, I mean, if you don't answer their questions, there's hundreds of people in that webinar, guys. And if you don't answer someone's question like once, they get super irate. So this guy was like, well, what's going on with gold or with crude? Look, I wouldn't touch it. I've been saying this. And if anything, if you put a pistol to my head and say I'm going to blow your brains out, Mike, what should I do with gold, with crude? I'd say short it. Now, I say that because of the level that we broke through, where we failed ahead of, the fact that it happened on news of that strike on, Saudi oil pipelines. Look, the news, guys, is only going to charge a move. Very rarely does a singular news event change trend. Okay, so I just thought after that spike that it was kind of, if you had to take a position, fading it would be the move to go. Now, at the end of the day, we're still straddling this critical region, and I need to see how the week materializes around this. If it materializes with a closed northbound of 60.45, that's a breakout, end of conversation. If it closes the week south of 55.70, 59.74, well, in my mind, that would be a failed breakout, period. You'd look for a resumption lower. Everything in between now and then, guys, is noise. Okay. Um, Again, that's just my humble opinion. We didn't get a chance to go over dollar CAD, and I do need to run here, guys. But just to take a quick look at dollar CAD, sort of the ancillary corollary markets that people will tend to lean on. Um, that thing is also, basically probing a major critical resistance level. We're looking for. We said earlier in the update, guys, in this week, it's either a short off 32.87 or 33. Where is dollar CAD? The last update on dollar CAD. Right here. Okay, it's either 32.87 or 33. 33.06 is the 1618. The pivot above the median line pushed it through the upper parallel, pushed it through that. We hit the 618. It's either exhaustion off one of these, while noting again that this is near-term bearish inval. If we mount and close above 33, this thing would be a breakout. This thing would be a breakout. So again, ahead of schedule, but we're looking for possible failure in this zone. Okay, in this zone. Pretty limited on CAD data, so watch for the US dollar to really be driving this pair, but something's got to give. Near-term support now, 32.58, 32.56. Bullish inval, a break below the weekly open would shift my focus right back towards these levels. Now, again, you have to just adjust these levels as they come, guys, as the new high registers. Again, we have no way of knowing this is an important high, but just to give you a picture, if this were to spike into here and pull back, that's the retracement I'd be looking for. I'd be looking for confluence on where that converges on slope. And right now, that gives you the 618 somewhere around 32. But it's all about failure here. It's got to happen basically into the open of US trade today. So level of interest for exhaustion on the dollar CAD rally, and again, take the corollary with crude for whatever implications you want. Dollar CAD's near resistance. All right. Any other questions before we wrap things up? I'm sorry, guys. Again, I want to apologize about the delay in the webinar and a kind of haphazard throw in today. I was going to cancel it, but I really didn't want to do that just because I want to talk to you guys before FOMC tomorrow. So these are the setups that we're looking at. I'll give you an update again tonight on the intraday page. And if there are no other questions, we'll go ahead and wrap it up here. Best of luck trading tomorrow, guys. We'll pick things up back here on the intraday strategy webinars on Thursday morning to cover the aftermath and the BOE, which will be on Thursday as well, and the SNB for that matter. Stay nimble, okay? Things are likely to get quiet. That thin liquidity conditions likely to start the onset of tonight ahead of the release, and we will pick things up back on Thursday. Cheers.